Good afternoon, everyone. Thank you for joining us for this webinar. I'm going to run through just a couple housekeeping and then I'll pass it off to Carrie. So we are going to take questions throughout. There's kind of four sections, Carrie said, and we'll try to take questions after each section and then we'll wrap up with any that are remaining at the end. And then, of course, this webinar is being recorded and will be posted on the ISAC website along with Carrie's slides. And I think that's it. So, Carrie, I'll hand it to you.
Thanks so much. Hi, everyone. I'm Carrie Johnson with Department of Management, and I'm going to do a presentation today to talk about the fiscal 27 county budget. And like was mentioned, I'm going to talk about four sort of different segments as we go through it, right? So we'll sort of work our way through the process, sort of talking big picture, the timelines, what's the role of different folks within county government, and then looking at the budget itself, the county budget itself, what are the funds, what are the expenditure classes that counties operate within. Then we'll talk about the revenue side, the property tax revenue side. What are the levies? What are the rates, the limitations, et cetera. And then I'll walk through the process of completing the budget on the Department of Management online system. So for anyone that was around last year at this time, the good news is it's pretty much the same process. So we have a year in fiscal 27 where your budget process will be very similar as far as the statutory steps and timelines as it was in 26. So good news for anyone that went through it in 26. And for anyone that's new and this will be your first budget, just yeah, welcome to the process. And it may change next year. So we'll find out as we go forward this year. So again, I'm going to go through these four sections. If you have questions, I'll stop briefly after each of the little pieces. We could talk about any questions that came up at that time. We'll have plenty of time at the end for questions too. And if there's anything that doesn't get answered or you think of a question later, just shoot me an email. My contact information is on the last slide, and I'll ship my slides over to ISAC so they have them to post as well. And yeah, we'll go ahead and get started. And it's scheduled until I think 2:30, but we won't go that whole amount of time if it's not necessary. So we'll cover the material and then answer the questions and see how we end. Okay, so first of all, budget process and general timelines. Some of this is going to touch on statutory timelines, and some of it is just sort of general process timelines. And as a county, you may have different approaches to how you operate and sort of what works for you locally. The fall, of course, is when everybody's sort of starting to talk about um, spending policies or maybe labor talks, and people are thinking about, well, what projects? And when I say people, I mean your departments might be thinking about, well, what projects or, equipment needs do we have in the next fiscal year, that sort of thing. And then usually in November and December, so I'm, talking in the past here, the auditor, or if you have a finance person or a budget director, they'll furnish out some budget worksheets to elected officials and department heads to sort of put together in a little bit more organized way their plans for revenues and expenditures for that next fiscal year. As we get closer to the actual budget, the county compensation board, if you have one in your county, meets to recommend those salary changes for the elected officials. And the step that just occurred in counties is that county auditors certify values to Department of Management and to all the other folks that need those values for budgets by January 1. So we're sort of, completed that process in most instances. So the property values are out there, and our system feeds those into the budgets for tax purposes. So you can see those and see what you're taxing against. County departments submit their proposed expenditures and revenue by January 15th. The board is going to pull that together and sort of organize that and file that information. That information is communicated locally between the board, the finance director, the budget director, the auditor, that sort of thing, whoever's involved in that step of the budget process. Now, some of these are statutory deadlines, and again, you might be operating or functioning slightly differently as far as who's involved in each and every step. The first sort of real glimpse at the budget in a general sense is that a notice of proposed tax is published and posted on your social media not less than 10, no more than 20 days before a public hearing is held on that information. And along with that, essentially the same information is sent via a mailing to taxpayers to alert them to that proposed tax and to that hearing that's going to be held on that proposed tax. And that mailing, of course, includes the school and the city if they're an urban resident. And that mailing has to go out by March 15th. It can go out earlier, but has to go out by March 15th. And that is, again, same as last year, fiscal 26. The hearing itself is held for taxpayers and residents to come and present any sort of thought processes, positive or negative, regarding that proposed tax. And that hearing cannot be held any earlier than the 20th of May, or excuse me, March. And then once that first initial hearing happens, there's no formal action on that proposed taxation. The hearing happens, and then the board moves on and completes the proposed budget, puts that together in time for a notice to be published of a public hearing on that full proposed budget, not less, and that publication is not less than 10, no more than 20 days before the hearing. The hearing is held on that full entire budget, again, for folks to say their positives and negatives. And then following that hearing, the budget has to be adopted by the board by resolution. And the budget itself needs to be certified and on file by April 30th. So that's sort of our big time frame with the budget process. Now, there are certain steps that happen even after that budget is filed. First is that citizens have until May 10th to file a budget protest. I'll talk about that a little bit more. County auditors have to certify the county budget. And so, again, we'll talk about that a little bit more, but obviously you certify the county budget as well as all the other local government budgets in your county. Once all those local budgets are certified, then Department of Management comes in, does our review, and then we finalize those budgets and prepare a one-page certification of property tax rates. And we do that by June 15th. County auditor then pulls all that information together and provides a tax list to county treasurers by June 30th. And then, of course, once that budget is ready to go for that fiscal year and all these steps have been completed, then the Board of Supervisors is going to appropriate by resolution the amounts necessary for each of those officers and departments during that fiscal year that was budgeted. So that's sort of, like going from the very beginning of the process to actually starting the fiscal year following the appropriations. The Department of Management's role in this, so the role that I play, you're also going to work as a county auditor. You're going to work with Ted Nellison in our department because he does city budgets and township budgets and any miscellaneous. So you're going to, interact with him regarding the certification of those budgets or questions related to those budgets. And then John Parker in our office does school budgets, community colleges, 911 and EMA budgets. So if you have questions regarding those budgets, you're going to work with John Parker. For the most part, with me, I work with you on the values, I work with you on the county budget, and then other county items, county AFR, et cetera. For budgets, I work with the counties, the county hospitals, your ag extensions, and then also city and county assessors. So those are the budgets that I work on. And for all those budgets, Department of Management provides the forms. So when I say forms, I mean, the web-based software. We provide the instructions, we provide technical assistance, do presentations like this to help people understand what they need to do to file their budgets for all those local governments that I mentioned. And of course, if you don't already have the county resources page bookmarked on our page, this is what it is. I do suggest bookmarking it, in your web browser, just so you have it. This is where you'd go pretty much to find anything that you need from Department of Management that's related to counties specifically. So again, we talked about the timeline, county department roles. Um, Obviously, that your departments have to put together their their requests. What do they need as far as proposed expenditures in that office or department for the next fiscal year? What revenues might they be bringing in that next fiscal year? An estimate of any fees that they're generating that are revenue sources, or if they're applying for a grant, let's say. That sort of revenue source. So they need to provide the expenditures, proposed expenditures, as well as an estimate of revenues other than property tax. Keep in mind, property tax is always intended to be sort of the final piece, right? We know we have to do these things. We have all these other revenue sources, and property tax is going to fill the hole there. It's going to fill that gap. County auditor then, or budget official, or whoever is receiving all that information, is going to compile it and make sure that it's communicated to the board. The board itself, your supervisors, they're going to maybe have some budget meetings with departments, hear presentations from departments, that sort of thing, ask them questions. They're going to pull all that together and pull the budget together as far as what needs to happen regarding tax asking. They're going to set the hearing dates that we talked about. They, of course, would conduct the public hearings and hear comments from the public. And then ultimately, they're going to approve the full budget by resolution and then appropriate that budget also by resolution. County auditors then, of course, come in at the end, like we talked about, that county auditors have to certify all local government budgets. And we'll provide separate training on the certification part if you're not familiar with it. I just want to make sure that everyone understands that, yes, county auditors are involved in the county budget process. In some cases, more or less, if you have like a budget director in your county. But county auditors also are involved in certifying all local government budgets once they're completed, adopted, and brought or delivered or uploaded on the Department of Management's website. So again, we're going to talk about certification later. It comes in April and May once budgets are being finalized, but it is a role, and it's a required statutory role of the county auditor. And then again, Department of Management comes in at the end and we finalize those budgets. So we do our own checks, and we make sure that tax rates and amounts are within any sort of statutory limits. We assist county auditors if they're certifying budgets and have questions. We help with that part of the process, and visit with you about any concerns that you'd have from the county auditor perspective when you're certifying budgets. But ultimately, we're going to finalize all the budgets. And there's, when we get into including townships, there's about 3,000 of them in the state. And each and every budget is going to get a tax certification, which is going to look like this. Again, we'll talk about it as we get closer to the certification process, but it's just basically a summary of the tax rates and askings for each and every local government. So one page, these are the rates, these are the dollars that this entity, this local government, county or township, whoever, um, has been checked over, and this is what they're certifying for the next year's tax statements. So at that point, I'm going to go ahead and stop with that part of the presentation. Looks like maybe we have one item in the chat.
Yep.
Does something need to be published and certified by January 20th? No, that's just a communication needs to happen locally, within the county of, budget information, departmental information, that sort of thing needs to happen. There's no publication. And really, that statutory deadline is in there, but it's just saying, hey, by January 20th, everybody should have communicated this information to each other, but it doesn't have anything to do with finalizing or filing anything with the state or publishing anything. So, okay, so we'll go ahead and talk about the different county funds and expenditure classification. So, how essentially what we're talking about here is how our county finances and the budget organized, and how are they presented is really what we're talking about here. So there are different types of funds, and when we think about funds, one way to think about them is different sort of buckets, um, in which expenditures and revenue are deposited. And each are considered, in accounting purposes, they're their own accounting entity. So it's its own little operation. It's self-balancing accounts comprised of assets, deferred outflow of resources, liabilities, revenues and expenditures. Each of these funds are going to report their own ending fund balance, that sort of thing. So they sort of operate as sort of silos or little buckets within your finances. Oops. So for some reason, this went a little bit wonky there for a minute. So you should be seeing where it says types of funds. If you're not, let me know. So types of funds, again, in a broad sense, counties have governmental funds that are budgetary and then non-budgetary funds. And we won't really get into the non-budgetary funds too much because we're talking about budget, right? And when we talk about the county budget, we're talking about the budget that the Board of Supervisors approves. As a county, you do accounting for things that are beyond only the county supervisor's budget, right? The county budget. But that is all non-budgetary funds. So we're really going to talk about budgetary funds here because that's what you're going to be approving through your budget process. Counties have general funds, they have special revenue funds, and we'll talk about each of these more in detail. Capital projects fund, debt service, permanent fund, and then governmental activities, which is really just referring to when you do your financial statements, government-wide reporting information. And then non-budgetary, the big one here that you'll see as a county is fiduciary funds or agency funds. And basically, a way to think about those are those instances, within your accounting system where the county auditor or whoever the financial folks are is serving essentially as the accountant for another entity, right? So, think about it like you are the accountant for your assessor, essentially, right? They do their own budget. That's not part of the Board of Supervisors budget. They do their own budget. They have their own board. Um, and they have their own process over here. They approve their own expenditures, but still that money is for accounting purposes is within the county's overall accounting software. So you're accounting for their money coming in, their money going out, their expenditures, and those different things. But it's not finances that the Board of Supervisors has control over. You're just simply, it's an agency fund. You don't report on it because they report on it on their own. The assessor does. And you don't control it. The conference board is who controls it, not the Board of Supervisors. So you're just sort of serving as the accountant for them. And so it's non-budgetary. So you're not going to report within the Board of Supervisor budget that we're talking about any of their information. You also might have proprietary funds. Sometimes folks, if they're self-insured, have an internal service fund. Again, this is non-budgetary, just meaning that, again, you're not reporting on it within your overall Board of Supervisor budget. So governmental funds, we'll talk about those in a little bit more detail. We have the general fund. So that's a common phrase thrown around. It's basically the general operating fund, right? General tax revenue goes in there. If something doesn't have a statutory home otherwise, as far as revenue or expenditure, then it's probably a general fund revenue or expenditure. So again, if it's not supposed to have a home otherwise by law, then it's probably general fund. Special revenue funds are those that have specific sources that are required by law or regulation to be accounted for separately. So we'll talk about some different examples of this, but this is, there's a very specific type of revenue you're getting, and it's used for a specific purpose. Capital Projects Fund. This is used for the acquisition or construction of major capital facilities and capital assets. So things like, the construction of a building or a large, a bridge project, something of that nature. Things that might be something a little bit more smaller and not really considered a facility or an asset. Things like equipment or vehicles, that sort of thing, would probably be like a general fund expense. But we're really talking about large projects here. We're going to build a new jail, that sort of thing. Debt service funds, this is really where you service your debt. This is to account for the payment of interest and principal on any of your long-term debt, unless it's being authorized to be paid from another fund. But most of your, if you've got a bond issue out for your large jail project that you're going to do, and you have to, make a payment twice a year to that debt, then you're going to show that payment out of your debt service fund. Governmental funds, another one is a permanent fund, and those are for situations where that you have a pot of money, and the only thing that can actually be spent is earnings on that money and not the regular principal. So, an example of this, I think of this more, and it may not be the best example, but like if you had a perpetual care cemetery, um, and the only thing that could be spent towards that cemetery were the earnings on the balance that is setting there, and the earnings are what's used to take care of the cemetery, the interest earnings. That would be an example of a permanent fund. And then governmental activities, again, you don't see this as part of your budget. It's part of your government-wide statement of net position that you see as part of your audited financials. So those are your budgetary that are going to show up in your budget. Non-budgetary, again, agency funds. So it's just where you as the county are sort of a custodian for those funds. other governmental units, like I talked about with the assessor, also 28Es, for which the county is a fiscal agent. So if there's some sort of local commission and you are contracted as a county to be their accountant, their fiscal agent to handle the money ins, money outs, then that's an agency fund and not reported because you don't have control over it. It's not budgetary for you as the county, as the Board of Supervisors. Enterprise funds, again, this is situations, and counties don't have as many enterprise funds, but where a fee is charged and that's intended to fully offset the provision of that good or service. And, that again, not as often used in counties, but there are some examples out there. Internal Services Fund, the best example would be a situation of self-insurance. So you may or may not have one of those in your county. So special revenue funds. So those are all of our, sort of general funds. Special revenue funds. One is the Rural Basic Fund, and it's a special revenue fund because it's intended solely to benefit those within the unincorporated areas of the county. So the rural residents are supposed to receive the services of the Rural Basic Fund. Rural supplemental. So if the rural basic is insufficient to meet the county's needs, they can uh, they can levy additional in the rural supplemental, but only for specific reasons set forth in statute. And that's for FICA, IPERS, and unemployment premiums associated with salaries for rural basic. Another one is the Aviation Authority. Another special revenue fund is a secondary roads fund. This is specific for the operation and maintenance of the secondary roads within the county. The revenues that come into the special revenue fund are very restricted and limited. It's oftentimes revenues from the road use tax fund from the state, farm to market monies that would come from the state. And then the secondary roads fund is also funded by transfers from general basic and rural basic, depending on the particular county. So that was a lot of discussion about the funds, right? Your different buckets within which you as a county operate. So we'll talk about now the expenditure classes. What are the general categories within which you expend as a county? And when you look at your budget forms, and we'll take a look at those in just a little bit. But when you look at those, they are organized by service areas. There's lots of different ways these are referred to: service areas. And then within those areas, there's different functions, their expenditure classes, what have you. It's just essentially ways that have been devised to break up into categories the types of services you as a county are expending for, right? So one is your public safety and legal services. Obviously, that's like your sheriff's department. If you provide ambulance service, or if you pay for ambulance service, provide a contribution towards ambulance service, that would be in there. Your contribution to Emergency Management Association would be in here. Any sort of, your court-related costs would be in here as well, county attorney, etc. Physical health and social services, exactly what that sounds like. County environment and education, you'll see, different things here: recreational trails, your weed commission, all sorts of different things. Libraries would fall under this category if you're providing a benefit to the library. Roads and transportation, that's your secondary roads. Governmental services to residents. This is things like elections, different activities of the treasurer, that sort of thing that they would provide. Administration is really, for instance, the cost of your insurance that you might have, liability insurance. This is where you'd see the Board of Supervisors related costs. Non-program and other budgetary financing uses. This is sort of anything that doesn't fit in another way. This would be things like, let's see, what's a good example? If you operated at some point a county, well, they used to call them county farms, but sort of those service organizations within the county that provided different functions, those would fall there. Anything that's non-program, meaning it doesn't quite fit into one of the other categories. So we're going to put it in its own separate place. And then non-function general revenues, again, this is more related to your financial statements as far as that goes, right? So that's more specific to your your audit and your annual financial statement that will come out after the audit. So at that point, that is just a review of your expenditure classes, your different buckets, your funds that you operate out of. Are there any questions related to those items? I don't see anything in the chat. Let's check the Q&A. Okay, and nothing in the Q&A. Okay, so I'll go ahead and move forward to our tax rates and levies. So what we're really talking about here is the piece of your revenue that is property tax, right? Like, so what are your different rate and levy limitations on property tax revenue? Let's see. Sorry, locked up for just a minute. Well, first of all, when we talk about property tax revenue, we have to talk about valuations. And that is what everyone has been working on, right, for the last month. And we need valuations because we need to know what sort of revenue can be generated, property tax wise, when taxes go out. And so we need those valuations. We need them in our budgets, those figures in our budgets, so we can know what type of property tax revenue is even available. So for the fiscal 27 budget, we're dealing with the 2025 assessment year. And so obviously the valuations themselves, they're assessed by your local assessor or by Department of Revenue, depending on, what class of property we're talking about. It's based on market value or other factors. All those classes that assessment occurs, and then Department of Revenue issues, and they issued that back like 1st of November. They issue an assessment limitation on those different classes of property, just to say, well, okay, we know that this class of property statewide, for instance, grew this much, but for taxation purposes, we're not taxing the full market value. We're actually only going to tax a percentage of that assessed value, and that is the assessment limitation, or you may hear rollback. Rollback's sort of the antiquated term, and so assessment limitation is a little bit more accurate as we go forward. But just to sort of run through them, as you did your values, these types of limitations were applied to the different classes of value within your county. So ag property, so ag land and buildings, is taxed at a percentage of 59.4401%. Residential is taxed at a percentage of 44.5345%. And then commercial, industrial, and railroad property is taxed via a two-tier assessment limitation. So essentially, the first $150,000 of value in a unit, in a property unit, is going to be taxed at the same percentage as if it were residential. So that 44.53. And then anything above $150,000 in value is going to be taxed at 90% of its value. So commercial, industrial, and railroad have that different assessment limitation that looks at the total value, and the first $150,000 of it gets the residential rollback, and then anything above that gets a 90% rollback. And then utility property for fiscal year 27 has it's been 100% for a long time, but they put in place some changes. This class of property doesn't have a whole lot in it, but it has like pipelines and some municipal utility type stuff, that sort of thing. And so, depending on what type of utility it is for 27, they're either getting a 90% taxation, so taxed at 90% of their value, or they're getting a 94,2059 taxation percentage. So it just depends on what type of utility that is. And I know sort of this has been one of a big question this year because this was sort of a change for the 2025 values. But I think this has all been figured out locally. If you have any other questions about this, though, certainly reach out to Department of Revenue if you have questions about the utility value within your county. But anyway, why do we care about value? Again, because that is going to be tied to our budget and what sort of taxation is going to be applied and what sort of property tax revenue is going to be generated. So again, valuation is set by the assessor and Department of Revenue. Applicable assessment limitation is to apply that to that class of property. And then as a county, all that different value, ag and residential and commercial and industrial is all added together to come up with one total taxable value for your county. And keep in mind, because we have those different rates, we have one that's total county and we have one that's, what's rural value, because there are certain levies that can be applied only to rural value. So we have our taxable value, we divide it by 1,000, multiply it by whatever the tax rate is, and that arrives at the revenue or the taxes that are levied. So just another example here. Again, tax rate is presented as dollars and cents per $1,000 of taxable property. So we have our taxable value divided by 1,000 times the tax rate equals the dollars or the levy dollars. So example here, if we had a residential home in the rural area, the assessor valued it at 200,000. And we're not going to talk about any credits or exemptions or anything, just $200,000 in value, 100% value. Apply our assessment limitation of a little bit over 44%. So the amount that's actually taxed that we actually apply a rate to is 89,000. So we take that 89,000, we divide it by 1,000. And then we multiply it by our rural rate. And I just picked a rural rate of $9.50. Pretty typical rate for a county in the rural area. And so for that residential homeowner for the county part of their tax bill, they would be paying $800.46 and $846.16. So that's just sort of a quick and dirty of how we get from value to actual dollars for an individual in this case. So when we talk about property tax levies, one very important key thing to keep in mind as a county is that you can only tax, you only have the authority to tax what is in law. So you cannot levy a tax unless it's specifically authorized by a state law. So you can't, as a county, decide, well, we really need some new, uh, we really need to work on the bridges in our county. So we want to implement a $2 bridge tax in our county and put that on your budget. That's not lawful. So you can only tax what state law says you can tax. So again, our categories when we think about levies, we have general county services that benefit all county residents. So our general basic, our general supplemental. And then we have rural county services that benefit only those outside the city. So that's your rural basic, that's the rural supplemental. Debt service is spread over the full county, and that's to service any debt that you as a county need to pay back and have issued as general backed by general obligation, essentially meaning that debt that you issued is going to be paid back from property tax, or can be, I should say, paid back from property tax. Other examples of property tax levies, there are some that are real specific. One is emergency medical services. So as a county, you can go to a vote and institute a 422D EMS levy that's going to apply to the whole county, just as an example, and more of a one that's been applied more frequently. You can also, there's also a provision for unified law. There's a couple counties that have a unified law district within their county when they're working with the cities within the county, and they implement a vote to have a unified law district. There's an opportunity for the county to then levy a tax within the rural area to support that district. So those are sort of our general categories of property tax levy. What we want to talk about specifically are the limitations that are applicable for fiscal year 27 for some of our general levies. And when I talk about that, I'm going to be talking about the general basic and then also the rural basic. A handful of years ago, there were some legislative changes that put in place different limiters on these particular levies. So it used to be that counties were able to exceed a rate limit of 350 for the general basic and 395 for the rural basic by publishing an extra notice in the paper saying, okay, 350 is not enough. We have these additional needs and we need to go to $4, for example. So essentially, a piece of legislation, House File 718, struck that ability and put in place some different limiters to what counties were able to levy. When they sort of rolled this out, they allowed any existing exceeding amount to be included that was included in the fiscal year 24 budgets to be included in the calculation for fiscal 25. So that sort of carries forward year to year. So if you were levying a levy of $4.50, the idea was that when we calculated what your levy could be going forward, that 450 was used as the base. It wasn't a 350 base, that sort of thing. But now, in order to actually exceed the basic levy that you have as a county, you have to have an election moving forward. There is no longer an option to exceed the basic levies by publishing a notice. So if you had determined that what you were looking at for your levy wasn't sufficient, you'd have to go to a vote, is essentially what that means. So what the calculation is for fiscal 27 is same as it was in fiscal 26. There's a mechanism for levy rate to be reduced if, depending on what your value growth was from the current year to the budget year. And keep in mind too, as we move forward each year, whatever your rate ends up being for, or whatever it ended up being for 26 is used as part of the base calculation for 27. Under current law, maximums go back to 350 and 395 in fiscal 29. So no matter what rate you have, if you've had about $4.50, and then maybe it went to $4.40, and then maybe $4.35, whatever. In fiscal 29, everybody under current law is going to go to 350 and 395. So again, just to sort of give you an overview of those limitation factors for 27, we take a look at your assessment year 2024, so your fiscal 26 value, and we do this calculation both for your general basic as well as for your rural basic. So we take a look at your total countywide value, and this is non-TIF value, your taxable value in 26 compared to the taxable value for 27 that you just submitted, and we take a look at what that growth was. So if your growth from fiscal 26 in value to fiscal 27 was under 2.75, then you're not hit with any sort of limiter or any, pushing down of your rate. If your growth was over 275 but less than 4, you'd have a 1% reduction factor applied to the dollars you could generate. So that would probably push your rate down a little bit. And then again, if your growth is over 4% but less than 6, it's going to be a 2% reduction factor. And so again, a little shaving off of what you could actually generate. And then if your growth is over 6%, a 3% reduction factor is applied. So I hear this misconstrued as, say, a percentage, like a revenue limitation of 3% or 2%. Things get thrown out, but that's not really what the current calculation is. What it is it's taking a look at what your growth is. And then if your growth is over, say, 2.75%, you're going to see a shaving off of what you could get. So it's a reduction or sort of like a little haircut of what you could have got in revenue if you just were able to apply your rate to the full value growth. Now, the budget forms make this calculation for you, but I think it's important for everybody to understand what's going on in that calculation. So I'm going to go through just a couple examples, and these are from, counties that have submitted value. I can't remember which counties these are, but I just pulled some so I could show you some of these different calculations. So for each county, you will see this on the top of your property tax tab, and it's going to show you the calculation for your general basic and your rural basic. So in this case, this county has in 26, they had so that's current year, right? Like last year, this is what they were operating under. This last year at this time, they had a general rate of 346,535, right? And that generated them this many dollars. This was their value. So when we look at this value, what it is, and we compare it to what it is, what's been filed just recently for 27, they had a little bit over a 4% taxable growth. So their value grew a little bit over 4%. So that puts them in the classification or limitation percentage class of 2%. So essentially, we're going to shave off 2% of what they could have gotten. So their revenue growth is actually going to be a little bit over 2% because we're going to shave about 2%. It doesn't equal exactly because of just the way the calculation's made. But we're going to shave off about 2% of what they could have gotten if they were able to capture the full amount of growth. So, because they can only capture about 2% of that growth and about this many dollars, then that's going to push the rate down from what it was. So instead of 346, it's going to be 339 for their general. And this is their maximum rate. Again, these rates, these maximums, are calculated individually for each and every county, and they're calculated separately for general basic versus rural basic for each and every county. So in their rural basic, they levied about $3.20. This is what it generated for them. This was their value in 26. With the value they just submitted, they're experiencing about a little bit over 3% growth. So that puts them in the limitation calculation and limitation category of having a 1% limitation factor. Because again, this is where they'd land, right? So they're going to see a 1% reduction factor. So we're going to shave off about 1% of the growth that they could have gotten in revenue if they just, stayed with the taxable growth and value. And then that pushes their rate down a little bit. This is the dollars they can get. So to get those many dollars, it pushes their rate down a little bit from 320 to 317. So this is another county. This is one that has less growth. So if, same sort of situation, but sort of two ways it plays out, right? So they're over the 350 limit. They have been, but their value growth is under 2.75, right? So they are not subject to a limitation factor. So essentially, they can get that 2.6 growth in revenue and keep their rate the same. So they're going to get just all they could, this is the maximum again, they could get basically all that the taxable value growth would provide them, which is 2.6. For their rural rate, again, their taxable growth was really not very much at all. It's under half of a percent. So they're not subject to a limitation factor. So it's zero here, no being subject to a limitation factor. But in reality, this county is under the rate limit, right? Because they're levying, or they, like in the current year in 26, they levy 383, which is less than the 395. So technically, they could go up to the 395 if they would choose to, because they're not subject to a limitation factor. Um, and that would provide them with a revenue growth of a little bit over 3% if they would go that way. Again, when we talk about maximums, it's always this is what you could have top end. Okay, so this is a county with a lot more growth. So their rate's pretty low. It's 245. Taxable growth puts them in the top category for a limitation. So their taxable growth is about 10%. That puts them in the 3% limitation factor. So we're going to shave off about 3% of what they could have gotten and provide them with a 7% revenue growth as a maximum. And again, that pushes their rate down. And then for their rule, similarly, lots of growth. They're levying, less than the maximum, 176. They got a lot of growth though. They're in that top category. So we're going to shave off 3% of what they could have gotten and leave them with a potential revenue growth of 8.6. But again, that pushes their rate down because they have lots of value growth. So I did see a couple questions. Okay, so again, I was actually going to talk about this in this slide, so good segue. So it was just asking to confirm that the county's general basic rate, so they, whatever their general basic maximum is, in this case, it's a 3,39740. So it's less than our old 3.5, right? But that county, their maximum is 339. They could lower it, like that ultimately is your option. You could levy lower than that. But keep in mind, when we talk about supplemental levies, you have to be at your county limit in order to levy anything in the supplemental. So they, in that instance, if they needed to levy the supplemental for those specific reasons that are available, then they would have to levy the general basic at its maximum. And same with rural basic too, although the rural supplemental is just simply not used quite as much. So it's not as much of a factor. But yes, if you want to use a general supplemental, and the general supplemental is limited in purpose, it's not capped in rate or dollar amount, but it's limited in purpose. You could only use it for very specific purposes. So it's self-limiting, right? So you can use it, and the most common examples are elections, FICA, IPERS, health insurance, things of that nature. Support of the emergency management agency, that sort of thing. And then there is a supplemental levy available for the rule too, but it's not used quite as widely. In any case, you as a county have to be at your general basic maximum or rural basic maximum if you want to use the supplemental levies. And why is that? Supplemental levies are intended to be used only once you're getting everything you can from the basic levy. And so that premise and that statutory requirement has not changed. You should only be asking for supplemental once you've exhausted your capabilities in the basic. So when you talk about reducing your rate, you're going to reduce, if you're using supplemental, you're going to reduce your supplemental rate first, your supplemental asking first. If you're using any supplemental at all, that's where your rate reduction would come from. For the taxpayer, whether it's a general basic rate reduction or a rural supplemental, or excuse me, a general supplemental rate reduction, it doesn't matter. It's still a reduction to the rate that they're paying. But just functionally, you cannot use a supplemental unless you've exhausted everything in general basic. And there are folks that are able to not use a supplemental at all, and they're levying less than and have been levying less than 350. But again, that's just the way the statute is written. Exhaust everything in the basic levies before you use anything supplemental. Okay, and debt service, again, we've talked about it a couple times. Debt service is primarily used to pay the interest and principal on general obligation debt. It can also be used for certain judgments against the county. If you have a lease with a city for a joint building, it can be used for that, and certain payments under a lease or lease purchase agreement. Cemetery levy, there's a levy that's available within the general fund. It's sort of a little additional piece to the general fund. It's not part of the rate limit calculation, but it's to maintain cemeteries that are under the Board of Supervisors jurisdiction. And it's accounted for within the general fund. It's a rate limit of about 6 cents. And there's a handful of counties that use it each year. EMS levy, if a county provides fire protection to a township, the county levies for the township levy. Currently, this is only applicable in Polk County. So in Polk County, the county levies the township fire protection levy for each of its township within its budget. Still, the township is the one providing the service, but the county is the one that has the levy within their budget. Unified law enforcement, it's an opportunity for cities and counties to jointly get together and set up a district to share services in a formal way, in a unified way for law enforcement protection within the area. There's a couple counties that do this, and the county does have an opportunity to levy a dollar up to $1.50 on the taxable value of the rural value. It does require a vote of the people. If you have any interest in sort of this concept, you'd want to look at Code of Iowa 28E22, or, talk to those couple counties that use this. There's a flood and erosion control levy that's available out there, just not used very much by, or I haven't seen it in 20 years. Any counties using this just because of some of the stipulations, I believe, on how it's set up. But that is a levy that you can investigate if you would choose to. EMS levy. This is one that's becoming more popular. It's to provide emergency medical services for a specific number of years. There is a set process if you're doing a county-wide levy under 422D. It does require a vote of the people. So you can certainly, visit with some counties that have done it. I can point it again to that section of code or send it to you if you'd like to investigate it locally. County tax rates, we have a lot of historical rates on our website. So if you want to, go pull some spreadsheets and look at some trends, or look regionally, hey, what are all the rates of the counties in my southwest region of the state, that sort of thing. Or you want to look at, okay, my county is about this population, so counties of a similar population, what rates are they levying, or what's their value look like? Is it similar to ours? That sort of thing. So if you want any sort of, just sort of research as you work on your budget, comparison, that sort of thing, we have a number of different historical property tax files out there. It does break up, it's just in spreadsheets, so you can pull them down and dump them into Excel, whatever you want to do. It's got your, each and every county's different pieces of their rate. So general basic, general supplemental, debt service. Do they have an EMS levy? What's the county-wide rate? So that's applying to everybody. What's going on in the rural area? Do they have a rural basic? Do they have a rural supplemental, et cetera, et cetera? So again, you can pull that information down and take a look at it if you want to do some comparison or some historical information. Some of the other revenues that are sort of related to property tax, but not property tax. We talk about the business property tax replacement. That's really the two-tier replacement. It's sort of shifted from a credit to a two-tier assessment limitation. And there is a process by which the county files for replacement credits from the state. In commercial and industrial, there used to be a rollback replacement for commercial and industrial. That's phasing out over time, but there still is a little bit being paid out for commercial and industrial, depending on what county you're in. So anything that's like that, sort of a state shared revenue that's intended to replace lost revenues, or foregone revenues because of changes to the property tax system, that would be found in the 2200 revenue sources. That's where you'd report it. So there's been a couple years of that two-tier replacement dollars. So you can kind of look and see historically what you've received as a county from that. That's a way to estimate your replacement for those. Again, commercial and industrial is being phased out. There's still a little bit of that out there. And we have a spreadsheet that had estimated the future year replacements throughout the time frame. So you can take a look at that spreadsheet to kind of help you budget what those replacement dollars might look like as they come in as revenue to your county. There are two exemptions that affect your valuations, but you're not going to see replacement dollars from the state as revenue. So there's a homestead exemption. This is for those 65 and over. It's really basically an exemption, a reduction in value. And you see that, come in as part of your valuation process. You see those homestead exemptions. It's a reduction in value, but there is no replacement revenue from the state for that exemption. And military exemption has been around for a long time. They did increase it with House File 718 a few years ago. So it again, it's an exemption. It's a reduction in the value that can be taxed for the folks that receive this military exemption. So it's sort of a reduction in the taxable value, but it is not funded by the state either. So that's sort of, just a few items to talk about related to taxation. Oh, and where did I say the report is found for comparing levy rates? If you go to the county resource page and kind of scroll down, you'll see different county rate reports. And if you have any trouble finding it, just send me a quick email and I'll send you the link directly. But if you go to the county resource page, that would be the place to look, but you'll have to scroll down onto the page a little bit. So are there any other questions? Looks like maybe one just popped in. Okay, let's see. Oh, okay. All right, so I'm going to take the time now to walk through the budget process and timelines. And we talked about the calendar already. Right now is a time when valuations have been submitted and departmental estimates are being gathered and sort of all that information is happening, right? So the first real statutory deadline that you have is March 5th. So essentially, prior to March 5th at 4 p.m., cities and schools, but counties, you have to enter your proposed property tax information into our system. So there's a proposed property tax notice that's going to be populated. You got to go into the property tax tab and you have to say, okay, we know we're going to ask for these many dollars. And then that's going to be fed into the property tax hearing notice. That's part of our system. And it's also going to be in our database to be available to pull for those statements that counties have to send out to taxpayers. So by March 5th at 4 p.m., you've got to know your property tax asking. And it doesn't have to be your final property tax asking, but you cannot go higher than whatever it is that you put into this notice, right? So if folks are a little unsure locally, just know you can't go any higher than whatever's published in this notice and in those statements. So you can say, okay, we're going to ask for $2 million in for our general and general supplemental together that asks for $2 million. And that's what we publish. Now you can reduce that later on through the process to, instead of 2 million, we can reduce that to 1.7 million, but we can't decide later we want 2.5 million. Okay. So this is no, you can't get any more than whatever it is that you put in this notice for property tax asking. And if a city or county fails to get that information in there by March 5th at 4, you're going to be limited to the prior years, budget years, budget amount. So whatever you asked for in 26, you cannot get any more in dollars than what you asked for in 26. You can't get any more in dollars in 27. So just keep that in mind. It's a very important deadline. So by March 15th, says on March 15th, but that's just really the deadline. By March 15th, you have to mail out those proposed, as a county auditor, the proposed notice statement to taxpayers. This process, if you had to do this last year around this time, well, in March, the process is the same. The notice looks the same. They didn't make any changes to that for 27. Again, down the road, I don't know, but for 27, it's going to look exactly like it did in 26. So that process hasn't changed. You'll hear more from us on that. You don't have to worry about it right now, but just important deadline. Then no earlier than March 20th is when you can have your first hearing on that proposed notice. So you got to enter your proposed tax asking and also have set your hearing date to be included in that notice and into the property tax statement mailer. So you set your hearing date, you have that hearing. Again, when you set your hearing date, you have to give it not less than 10, no more than 20 days notice in the paper. It's got to be in all your official papers. I know some counties have 3. It's got to be in all your official papers within that time frame. And again, so that point in the process, you've got to know what your tax asking is, and when your first hearing is, you hold your hearing on the notice, let people say their piece, and you move on from that. And then you go to your second hearing, or you've put together the rest of your budget, determine when your second hearing is going to be on the full budget, give notice for that hearing, and then move forward, adopt, etc. Again, for that proposed tax levy hearing, you got to put it in all of your papers. And it also has to be on your webpage and social media. And you just have to put it in there no later than when it actually goes in the paper. So you can put it in there earlier, that's fine. It just has to be in there by the time it goes into the paper. That hearing notice itself, you're going to have it. The notice includes certain information, a lot of what we provide from our own databases. We're going to pull in current year rate in dollars from the fiscal 26 process. It's going to list, your proposed years just from what you've entered. And if there's any increase, then you're going to have to explain the reasons for the increase. We do a calculation that they have requested in statute of the impact on a residential and commercial property owner. We're going to provide a percentage of property tax in relation to other levy authorities. Again, the time, date, and place of the hearing is going to be on your notice and as well in this budget statement mailer. Just keep in mind with that hearing, it's really just a hearing into itself, and it can't occur during another meeting. And remember, of course, the notice for this has to be on your webpage and any social media. So the hearing on that proposed levy, separate from anything else. You don't take any action on it. You just listen to folks. And after that point, you can decrease, but you cannot increase. Move forward with the rest of the budget process, pull together all the budget information, set a date for the hearing on the full budget. Again, all newspapers, not less than 10, no more than 20 days prior to the hearing. You hold that hearing. That hearing doesn't have requirements as far as being separate from another meeting, that sort of thing. And there's a statement in there about how to protest a budget. We included that, so you don't have to. In all your newspapers, not less than 10, no more than 20 days again. And at this point, because you've got expenditure information in there, just like property tax asking, you can reduce, but you cannot increase. So if you asked for, $5 million in expenditures, you can go to 4.9, but you can't go to 5.1. The budget hearing obviously is a chance for you to communicate to your public the information. You could take time to do any sort of different charts and graphs. You could do this during extra budget meetings, changes in, increased cost of services, particular projects you might be doing. This is your opportunity to communicate to the public. After the public hearing, the board adopts the budget by resolution. County auditor files it again, April 30. April 30 is the deadline. You can only submit a budget after that deadline because of circumstances beyond the control of the county. Now, it used to be very general like that. It's no longer general. You can only file a late budget if the newspaper screwed up, if there's a verifiable public emergency, weather related event, and you had to cancel your public hearing. There's, illness on the board, everybody's got the flu and you had to cancel, you don't have a quorum, fine. That's completely legitimate. Or if we had some sort of system screw up and you couldn't, do what you needed to do. So you and there are some the first situation is really about small cities. So if you had a city that was penalized one year and didn't get any tax dollars, there is a system to allow them to have some tax dollars this year. If you have that sort of scenario with a city budget, you're certifying, talk to Ted. But keep in mind, if you don't meet that April 30th deadline, you are limited to the taxes levied in the prior year. So you can't get more tax dollars. It doesn't have anything to do with rate. No more tax dollars than what you got in the prior year. The budget protest deadline is May 10th now. And we include that language to tell people how to protest. We direct them essentially to our website. So folks can circulate a petition, and if they have at least 100 signatures for a county budget protest, they can submit that to the county auditor by May 10th. And then the state appeal board would come down and do a public hearing on the budget protest. And there'd be a whole separate process that would be involved. So if you hear sort of inklings about people protesting your budget and you want to know exactly what that process is, please just give me a call and I'll talk you through it. Appropriations, again, the board, after that whole budget has went through, they're going to have to appropriate by resolution the amounts necessary for each of the offices and departments during the next year. Now, there's not any specific level of detail that's listed in code for that. So this is something you'd want to look at what has been done and is this level of detail sufficient moving forward in your county. A county official has to have an appropriation in order to spend. During the year, there may be increases or decreases in appropriations. Just sort of that movement of money doesn't necessarily require a budget amendment as long as none of the 10 classes are, those categories that I talked about are increased. Just small changes might be able to be handled at a regular meeting of the board. But if there's a decrease to a specific department of more than 10% or $5,000, there has to have a public hearing on that decrease. So just sort of keep that in mind as you talk about appropriations. A budget amendment is required again for any of the increases in those classes of property or classes of expenditures. So like we talked about public safety and legal services or roads and transportation, if any of those are going to go over in total or that's anticipated, you need to amend before that expenditure amount is exceeded. And an amendment requires the same notice and hearing procedures as the original adoption of the budget. And those are also subject to protest. So the amendment form itself is online. Essentially, you'd go to your current year budget and click amend in order to generate the amendment form. And I can certainly walk you through that if you have questions. Now, the budget system for 27, if you did this in 26, same sort of look and feel, guys. The forms themselves didn't change. We're not in the business of changing anything if we don't have to, unless we want to really, to make things look better or work better. This year there were no changes. So budget system your access should move. You should be able to move within the form itself using the tab key or the enter key. Keep in mind when we look at fund balances, and this is in all cases, they're produced by subtracting the sum of expenditures from beginning balance plus all other revenue. So to access the system, you go to that county resource page and go to online applications. You log into the system using your Enterprise A&A account, ID and password, and you select your budgets over on the left-hand side. So it's going to show you your county auditor. You see a lot more budgets because you see all the budgets in your county, but it'll show you fiscal 27 as a new budget before you get in there the first time, and you click the edit button to get into it. So as I talked about before, your pages of the budget are tabs on the top, right? So they kind of go along with your service areas. There's one for long-term debt. The property tax tab is the one that you're going to get into first because that's where you're going to enter your tax asking. Um, any time you see where there's white cells or white cells are the ones that are either calculated fields or pulling data from another source. Blue cells are the ones you enter into. For this exceed general and rule, you only use that if you have an election locally to exceed your maximum rates. Again, proposed tax notice is the first thing. So you have to enter your tax asking. Pretty much everything else other than time, date, and place of your hearing is going to be in there for you. And this is kind of what it looks like. Again, lots of white. This is all entered for you. This actually has last year's look, but same look. This is all going to be pulled over for you from our database. You're going to enter this on the proposed tax page and it'll pull over. And then when you're ready to get that information out, have your hearing notice, etc., you would propose it. Again, you have to propose it to make sure that we have it in the database to be pulled for that mailing. And you have to do that by March 5th. You then move forward. You enter all the information on your summary pages. Keep in mind with the budget, you have to enter 3 years of data. So you plug in the actual year information from your fiscal 25 AFR. Then you put in, current year budget as re-estimated. So your 26 data and then your 27 proposed. And you can't move forward until, you move through each step, right? So you propose, publish that property tax hearing notice, and then you work on the rest of the budget. When you've got it all done, then you'll propose again for the full budget hearing. Once your county is populated, once your county has submitted values, those are already in there to calculate your tax rates. If you as a county or if you're a finance person, your county auditor has to go in and make a correction, they unfile that value and you'll see this notice at the top that just tells you, hey, the value's been unfiled, meaning there's work being done on that value and it might change. It's just sort of a heads up. When it's filed again, that yellow bar will go away. In the budget, up at the top, you'll see check errors, save, print. You can check errors and do that at any time. You can print the full budget, or you can print just the current page, etc. And when you do your print, if, same process as before, you just save it off. You can print it off a hard copy if you want to, or you could just save to PDF. You can't propose your budget if you've got errors, right? So just keep that in mind. It's going to prevent you from moving forward. When you propose, it's going to check errors. If you're error free, you can move forward and enter the time, date, place of your hearing. And the system generates that notice that you need, right, to send to the newspaper. Following the hearing, the board can reduce things, decrease tax, decrease expenditures. You just return it to draft, save it, move it through the process again, and then adopt it as it's revised and reduced. So you click the adopt button and you are going to need to enter adoption date and the resolution number, click adopt. So that has moved it with forward through that process. So the documents needed filing following adoption are proof of publication for that proposed tax notice, a proof of publication for your full budget tax notice or full budget notice, and then a signed adopted budget and supplementary pages. We do have an option for you just to upload those. So sort of depending on your preference as a county, you can upload those. Probably especially helpful if it's, someone in the if you're in the finance department and the county auditor is going to be certifying, it's probably especially helpful to upload those if you're not, right there with each other. But you can upload those documents so they can then go pull them down. You'd upload your signed budget, upload your hearing notice for the first hearing, upload the hearing notice for the second hearing on the full budget. Very simple. You choose your file from your system and upload it. Again, that deadline is April 30th, so you do need to make sure that your documents are where they need to go, whether you're handing them over to someone else in the auditor's office to certify or you're uploading them into the system. Either way, you've got to make sure those documents are where they need to be by April 30th. Sometimes, folks, we all know that proof of publications may be delayed. If that's the case, then you got to do what you got to do to wait on them. But hopefully, those can be made available. So that pretty much uses my time, but I want to see before we go if there's any final questions. Anything, folks? I'll hit the Q&A real quick. No? Well, do all cities have to submit to us all the papers? So when we say all the papers, they have to submit their full budget, full signed budget to you. They can either upload it or they can deliver it hard copy or send it in the mail, whatever. So yeah, I mean, everything still has to get to you. And there's really two options. It's either hard copy to you, mail, whatever, or it's in our system. There's not an option for them to just, oh, I'm just going to email it over. No, they have to put it in our system or they have to deliver it to you. The calculation to figure the max transfer from rural services fund to secondary roads. That might take a little bit, little bit more information, frankly, than we have time to go through in the next 2 minutes. But essentially, there is a maximum and basically a minimum transfer to secondary roads. Um, and I can maybe just send that via email when I ship over my presentation. And maybe that I can just include a slide on that just includes what those minimum and maximums are. I can just plug in a slide that has to do with that and include it here. That might be the easiest way to do it. And then also moving up and down within the budget forms, it sounds like, um, oh, and somebody did say that they have a spreadsheet that calculates the max transfer. If someone has that they want to send to me and I can include it, or if you guys want to send it out over your email list, however you guys want to do it. I think that's great. I mean, I obviously the best resource you folks have is each other because you're, in the thick of it every day, right? So absolutely. Absolutely. If somebody has something that they want to share with that spreadsheet, either, send it maybe via your Basecamp or, if you want to send it to me and I can include it with a presentation or whatever works for you guys. Okay. Yeah. So it looks like there's some discussion in the chat about how to get that out to folks. So yeah, again, you guys are very good, awesome resource to each other. definitely, and especially if you're new, there's so many nice, helpful, wonderful county auditors out there that just are great to work with. So if you're new, don't hesitate to ask for help from other folks or from me, especially if you can find somebody that has your same software. That's always a good way to look at things, a good opportunity to to work together like that and kind of get somebody that has experience in exactly your shoes, right? So, but I'm always available to help if you have any questions. There's my contact information. So, other than that, I think we're basically right at time. I will send over the slides. Anything else?
Thank
Well,
you so
if
much, Carrie.
Yep, not a problem. And again, if there's any questions that come in, just send me an email.
Perfect. Well, sounds good. Thank you, everybody, for joining.
Thank you.